Ladies and gentlemen, good day and welcome to Patel Engineering Limited Q4 FY24 earnings conference call hosted by Kirin Advisors. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Ms. Vaishnavi Ambokar from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Patel Engineering Limited. From management side, we have Mr. Kavita Shirvaikar, Whole-Time Director and CFO, Mr. Rahul Agrawal, Head Strategic Finance, and Mr. Aditya Bajaj, Investor Relations. Now I hand over the call to Ms. Kavita Shirvaikar. Over to you, ma'am.
Thank you, ma'am. Thank you. Good evening, everyone. We welcome to the Q4 FY24 earnings call of Patel Engineering Limited. We have uploaded the presentation along with the results on the stock exchange for your ready reference. First, let me give you some insight on the Indian economy and the industry scenario in which we operate. India's journey towards becoming a developed nation by 2047 hinges significantly on improving its infrastructure to drive economic growth. Continuous efforts by the government to make the business environment convenient to operate and streamline the regulatory processes will support the growth of the infrastructure segment. Now, speaking about the power sector, the government has reiterated India's commitment toward the Panchamrit goals set at the COP26 forum, which includes meeting 50% of the energy requirement through renewable energy by 2030, achievement of net zero emission by 2070, and setting up 500 gigawatt non-fossil fuel capacity by 2030, among others. To meet the country's energy demand at a faster pace and achieve the targeted 500 gigawatt of renewable energy, there needs to be an increased focus on hydropower generation. The total exploitable potential of hydropower in India is around 133 gigawatt, of which around 42 gigawatt has been harnessed so far, and 18 gigawatt is under development. So, there is tremendous potential in this sector yet to be exploited. Out of the 18 gigawatt of hydropower project under construction in India, we are happy to share that our company is involved in executing work in projects of around 8 gigawatt, which is around 45% of the total projects currently under execution. As per the update by the Ministry of Power, around 19 gigawatt of hydropower projects have been concurred by the CEA and are ready to be taken up for construction, and another 18 gigawatt of hydropower projects are under the survey and investigation. These projects are expected to come up for bidding within next 1-2 years with an aim to complete by 2030. Apart from traditional hydropower projects, various steps have been taken by the government in order to ensure that pump storage projects get commissioned on a fast track. As per the ministry update, there are 39 hydro PSPs of 47 gigawatt being pursued to be commissioned by the year 2930. Now coming to the irrigation sector, Government of India has been focused on increasing the share of irrigated land to increase the efficient use of water resources and improve crop yield. To boost the irrigation sector, the government has implemented various schemes under the Pradhan Mantri Krishi Sanchay Yojana like per drop more crop, Har Khet Ko Pani. Under the Pradhan Mantri Krishi Sanchay Yojana for 2021 to 26, there has been outlay allocation of rupees 93,068 crores, which would benefit about 22 lakh farmers. Further, the Ministry of Jal Shakti got the major chunk from this year's budget outlay as Finance Minister allocated rupees 98,000 crore in the interim budget for 2024 to 25. Also, the upcoming projects for interlinking the rivers across the country has huge potential and will lead to further works in irrigation sector to come up and shall lead to reduction of droughts in various areas across the country. Moving to the tunneling sector, tunnel construction in India has picked up pace in the last decade given factors like upgrading the water supply and sewage system, expanding the road and rail network, constructing underground crude oil storage, apart from the traditional tunneling for hydropower projects, where maximum tunnels have been built. There is huge pipeline of at least 875 tunnels spanning a length of around 2,600 kilometers. So we see enormous potential in the coming few years in this segment of infrastructure development that the company has a dominating presence. Order inflow was a bit subdued FY24 as was expected due to the elections. But we expect large number of orders to be announced in the FY25 post the elections end in June 24. Hence, our company is geared up to take advantage of these upcoming opportunities. And recently, we have raised rupees 400 crore via QIP. The funds generated through the QIP will bolster the financial position of the company and not only help in debt reduction but also support working capital requirement for ongoing and future projects. Now let me throw some light on the operational highlights for the year. Firstly, this is historical year of our company as we complete 75 years of being in existence. Secondly, we are happy to inform you all that recently on 9th March, our Honorable Prime Minister Mr. Narendra Modi inaugurated the Sela Pass project, which is the world's longest bi-lane tunnel located at an altitude of over 13,000 feet above sea level. Few days ago, the Seda Tunnel was officially recognized as the highest tunnel in India by the International Book of Honor, England. I would like to take a moment to thank and congratulate all my colleagues who have worked in extreme weather conditions to overcome challenges and complete this project. The project is of national importance as it will benefit both strategically as our troops and machinery can now reach the border as well as help economic progress of the region. With this, we are committed to working on many more projects which are of national importance and doing our part to improve the infrastructure landscape of the country. Now let's move to the order book position of the company, which currently stands at around 18,600 crores as on 31st March 2024. In the last quarter, we received a letter of award for rupees 525 crore irrigation project located in Telangana, which is being executed in JV, and our share in this project is around 51%, which is around 260 crores. The project involves construction of RCC protection wall of 8.5 km each along both the right and left flanks of the Muneru River. Apart from this, it also involves construction of embankment of 2 km each on either side of the river. The project is located in Khammam district in Telangana and will be executed over the period of 2 years. The project was received from Irrigation and CAT Department, Government of Telangana. During the year, we received new orders amounting to rupees 4,000 crore. Coming to the composition of the order book, around 61% of order book comprises of hydropower projects, around 21% from irrigation sector, around 11% from tunneling sector, and 2.57% in road and balance rest from other segments. Out of that, 62% is from central government PSU, which are AA, AAA rated entities, and around 35% from state government and balance 3% for projects in Nepal. With the outlook and focus of the government on infrastructure and increase in budget allocation for this year, we expect a large number of projects to come up for bidding in FY25 post the election and expect our order book to grow at a good pace in the coming few quarters. Let me now take you through the financial performance of the company in the quarter, which has been good, and we have continued the growth momentum on a year-on-year basis. On a consolidated basis, revenue from operations for Q4 FY24 is rupees 1343.18 crores, which is up by 11.5% from rupees 1205 crore in the corresponding quarter in the previous year. This is due to strong order book growth and well execution of projects across 8 sites. Operating EBITDA for the quarter is rupees 237.6 crores as against 167 crore in the corresponding period last year. Net profit is up by 46% at rupees 123.37 crore for the quarter as compared to rupees 84.37 crore in the corresponding previous period. On a consolidated basis, full year FY24 revenue stands at rupees 4544.11 crore, which is up by 17% from rupees 3891.15 crore in the previous corresponding period. Operating EBITDA is up by 22.9% at rupees 690.3 crore as against rupees 561.56 crore. Net profit at rupees 264.10 crore, which is up by 71% from rupees 154.81 crore. On a standalone basis, revenue from operation for Q4 FY24 is at rupees 1256.9 crore, which is up by 5.5% from rupees 1192.18 crore in Q4 FY23. Operating EBITDA is up by 6.58% at rupees 187.58 crore as against 176 crore in the previous year. Net profit is at rupees 73.18 crore as compared to 84 crore in the corresponding previous period. Full year FY24 revenue on a standalone basis stands at rupees 4412.04 crore, which is up by 16% from rupees 3817 crore in the previous corresponding period. Operating EBITDA is 14.7%, up to rupees 620.11 crore as against 540.48 crore, and net profit at rupees 288.18 crore, which is up by 85% from rupees 155.85 crore in the previous corresponding full year period. Sector-wise revenue breakup on a standalone basis: from hydro it is 47%, from irrigation sector it is 30%, from tunneling 11%, road 3% and others 9%. For the full year, it is hydro 50%, irrigation 24%, tunnel 15% and road 5% and other 6%. Now moving on to the debt position. The consolidated gross debt as on March 31st, 2024 stands at rupees 1885.49 crores against rupees 1740.78 crore as on 31st March 23. Total advances from client as on March 31st, 24 is rupees 760.09 crore as against 1235.78 crores as on 31st March 23. Further, cash balance as on March 24 is rupees 338.7 crore as against 208.3 crore as on 31st March 23. Hence, net serviceable debt has reduced from 2976.56 crore in March 23 to 2645.58 crore in March 24, a reduction of 330 crore. The consolidated debt to equity ratio has improved from 0.61 as on March 31st, 23 to 0.6 as on 31st March 24. Now coming to the breakup of the debt, working capital debt is around 1100 crore and balance is term debt 700 crore, which is expected to be repaid over next 3 to 4 years, also from monetization of non-core assets and surplus from operations. The finance cost for Q4 FY24 on a consolidated basis is rupees 93 crore, which has reduced as compared to Q4 FY23, where finance cost was rupees around 103 crore. Also, on a full year basis, finance cost is 362 crore as compared to FY23, where finance cost was 412 crore. Our gross work of plant and machinery as on 31st March 24 is around 1100 crore. Total employee base is about 4,500 employees. The company has filed for various settlement amounts under the Vivad Se Vishwas scheme, which was launched for the settlement of pending disputes related to government contracts which were under ongoing arbitration. In the last quarter, we have realized around 130 crore through settlement of arbitration claims. Receipts from these schemes have helped us lighten the balance sheet and also augment working capital requirements for upcoming fresh orders. On a consolidated basis, our diluted EPS from continuing operation has improved from 2.23 for FY23 to 3.54 in FY24, and debt to operating EBITDA has improved from 2.8 to 2.42 year-on-year basis. We remain positive on the outlook of the sector and enhanced government spending, thus expecting steady growth in our revenue. We expect our revenue to continue to grow by around 10 to 15% in the coming years. However, in FY26, we should witness a higher growth rate of at least 20 to 25%, as new orders are expected to be received in FY25, which will start generating revenue in FY26, post the initial mobilization phase of 6 to 9 months in the current year. And also, existing ongoing projects would be at their peak execution stage. That was a small brief from our side. And now our team here shall be happy to answer any further questions which you all may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shyam Garg, an individual investor. Please go ahead.
Thank you for the opportunity and congratulations on a great set of numbers. My first question with respect to the realization of trade receivable. So, how do we see the realization of huge trade receivable of 554 crores in our books in this year?
So out of 554 crores, around 250 odd crores is current receivables, which will be realized, within 45 days is the cycle for realization. Around 300 crores is for arbitration awards, which we expect to realize over a period of 3-4 years.
Okay. And so my next question is with respect to the projects that you mentioned in the investor presentation of around more than 18,000 crores. So that is with respect to our portion of 18,000 crore, or that is cumulative?
No, order book is our portion.
Okay. And sir, what amount of order book we expect to get complete in this year?
So see, I think almost some 4-5 projects are within the 90 to 10%, 100% range. That may get completed this year, but depends upon, if some additional work comes in, then that's a separate case.
Okay. And so that we have mentioned in investor presentation that few projects are under different range of completion. So the value that has been shown is the amount of work that has been pending, or that is the total value of the project?
What is balance work that is being shown there?
Besides each project, there is the amount mentioned of the order. So that is the balance amount that has to be realized by the company over the period, or that is the total order of that particular project?
Balance work. That is the balance work.
Okay. Okay. And so, what is the bidding success ratio in terms of the orders that we bid for government or central government or state government?
20% to 25%.
And so what is the amount of orders we are expecting to bid this year post-election?
So there are some in the pipeline, around 80,000 to 1 lakh crore of work is there in pipeline.
Okay, so we can easily realize around 25,000 crores of order book. And the execution timeline for the same would be somewhere around 5 years? 2 to 5 years?
Yeah, 4 to 5 years.
4 to 5 years.
And see, out of 1 lakh crore, how much we will bid in this year, that will decide based on project to project.
And so what is the amount of debt we are expecting to pay this year?
So we are expecting to reduce debt of around, term debt of around 700, 800 crores over next 3-4 years. So or maybe around 200 crores this year.
And so what about the working capital loan? The potential allotment that we have done, will utilize that money for working capital and reduce the working capital loan as well?
Yes.
So that working capital loan would reduce by 400 odd crore, if I am correct.
So what will happen is the QIP money, first we will go for, parking in working capital limits. And then when the new projects will come in, we'll have to redraw for our new projects. So that's how it will be a mix of reduction of debt as well as working capital requirements for new projects.
Okay, sir. And so I will come back in queue for the rest of the questions. Thank you for answering my question.
Thank you. The next question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hi, congratulations on excellent numbers. 2 questions from my side. Ma'am, you mentioned that your peak execution for projects will be reached. Is that in FY25 or in FY26 for existing projects that you're running?
FY26, we are expecting to reach to the peak.
Okay. And my second question is regarding the sale of non-core assets. So we have arbitration claims of, I think in your presentation, of about 4,331 crores. And you said we received 130 crores in the last year?
Yes.
Yes.
Okay. And you're expected to receive 200 plus crores going forward every year?
Yeah, this year more funds will come under Vivad Se Vishwas scheme, so that is somewhere around 150-200.
Okay. Any progress in your land bank monetization? Last question.
So land bank monetization, last year not much has moved in that. This year maybe post elections, then when everything is clear, then we can start looking at some interest coming in from investors.
Okay. But you're actively pursuing that?
Yes.
Yeah.
Okay. Thank you. All the very best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Thank you. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Hi, thanks for the opportunity and congratulations on a strong set of numbers. So my first question is, what kind of order inflow are we looking at for the next couple of years? If you could throw some light on that.
See, what we are looking at is our order book to reach around 25,000 crores by end of FY25. So post execution of this year, so that gives us, if we last year our revenue was like 4,500, so between 10 to 15% growth in revenue, so around 10 to 15,000 crores of order inflow this year.
All right, understood. And what kind of margins are we looking to make on that?
So we expect to maintain our margins of around 14%, which is there.
All right. So, and regarding the debt, so as you said, 700 to 800 crores in the next 3 to 4 years. So, will it be, can we assume 150, 200 crores every year, right?
Right.
Okay. Understood. Thank you so much and all the best.
Thank you. The next question is from the line of Dhananjay Mishra. Please go ahead.
Hello.
Yes, sir.
Yeah, congratulations on a very strong set of numbers. Sir, can you give the breakup of inventory? We have 3,791 crore of inventory. So what is the raw material? What is the work in progress? Any unbilled revenue also part of inventory?
Yeah. So based on percentage completion, it is there. So see, our inventory breakup, broad breakup is such that it has land bank also around 30 odd days. Then we have amounts which will get realized through arbitration and claims also, that is around 100 days. Then 30 odd days is for stores and spares. And rest is work in progress based on percentage completion, which comprises of two components. One is the balance of initial mobilization costs incurred to be realized over the next 4-5 years, and around 70-75 days would be for work done and to be billed, because our normal working capital cycle is between 3 to 4 months.
If you could give absolute number in terms of all these breakups you said just said in days.
Actually, I have that in front with me in terms of number of days in front of me right now. We can send you a separate email.
So number of days you have calculated on revenue or on cost? On revenue only?
Yes.
Okay. And this year, I mean, in the presentation you have mentioned that you will be bidding for 50 to 55,000 for FY25, or this is correct?
So there is a pipeline of 82,000 to 1 lakh crore. Now, how much we'll bid this year, we have not yet identified.
Okay. And what is the current bid already submitted, which will be maybe results will be announced from July onwards?
So current bid submission out of that is around 10,000 odd crores.
Okay. So you are expecting some order to be announced in the Q2, right? From those bids.
Yes. So obviously, when it opens depends upon the timeline when it opens.
Okay. And thirdly, in terms of this land monetization, are you looking only for selling this land upfront, or are you also exploring to do tie-up with some developer for real estate thing?
Right now, we are looking to sell upfront only. We are not looking to tie up with any developer.
Okay. Okay. That is about my side. Thank you.
Thank you. The next question is from the line of Bhupendra Tiwari from ICICI Direct. Please go ahead.
Yeah. Hello, sir. Hello, ma'am. So I had this one question. The amount that we received out of arbitration, can I just find out which quarter did we receive, or was there any kind of flow through in the P&L for that?
So we received that money in this quarter itself, and
Okay.
in consolidated financial, in one of the SPVs, what we got, around 50 crores has come in P&L in this quarter. That's why the quarter EBITDA for consolidation is higher than standalone.
Fair point. Fair point. I think that was it. And you said that your expected margin is largely 14%, right? So if I net off that, so you expect that to be maintained, or do you think that a newer category, say for example, you get into hydro pump, hydro kind of segment? Do you think the newer category can give you more margins, or do you think that the margin is something that you have kind of this is the perfect or the best possible margin for a company like us operating at a 10-15% level?
See, for guidance, we would say that we would maintain on 14% on a blended basis. If we are able to improve, that is better for us.
Fair point. Fair point. And regarding the pure, how much debt is coming for the repayment this year, specifically FY25, in terms of long-term debt?
This year may be around 150 odd crores. I'll have to check the 200 crores. Right?
Sure. Thanks a lot. That would be fine.
Thank you. The next follow-up question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead. Mr. Viraj, your line has been unmuted. Please go ahead with your question.
I'm sorry. Yes. Is there a target net debt to EBITDA in mind for the management over the next, say, by FY26?
Net debt to EBITDA, see, right now we are at
About 3.8 or 3.5 plus.
Yeah. So see, what we expect is that overall debt, term debt will go down, so that will keep on going down. We have not kept a separate target in terms of EBITDA, but then with considering client advances and all, right now we are at 2,600, 700. So that may be maintained, even though the revenues are growing up.
Okay, so can you give us a rough net debt to EBITDA target on that basis for the next FY26? Even if it's a range?
Yeah.
It would be helpful. Thank you.
Thank you. The next question is from the line of Payal Lad from Progressive Shares. Please go ahead.
Hi. Thank you for taking my question. So just one question from my end. If you could please help us understand more on the increased stake which has been undertaken during the year for the tunneling business. Like what sort of prospects are expected from the same?
See, we have invested in a startup which is around a 10% stake for the startup. This is into tunneling business, more of into servicing of tunnel boring machines. So because we expect a lot of projects coming up for TBS in India, as we were talking about various works coming in tunneling segment. So we see a lot of opportunity in this segment, and this is an ancillary business to our existing EPC operations. So that's why we have taken a strategic stake of 10% there.
Oh, okay. So, like, do you anticipate your overall tunneling order book percentage to increase from here on, or would it continue to remain in the range of 10 to 11%?
So it may be there in the range of 10 to 15%, but then this entity may take servicing business of other tunneling companies also.
Okay. Okay. Thank you.
Thank you.
And what we expect is that the other question of net debt to EBITDA may be, somewhere in the range of 3.5 only. Good.
Around 2.25 over debt to EBITDA. Debt to EBITDA will be around 2.25.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Nikhil Malik from Well Investment. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes. Congrats on a good set of numbers. So my question is basically, things are looking pretty good, and future guidance is also pretty good, I would say. But just one concern, which is that in the past 5 years there's been 2 rights issue, and after the rights issue, we see that the promoter has been consistently reducing the stake. I mean, there's been equity dilution. We understand that we are in the business where we need to, raise capital consistently, I would say. But, that is when we have non-core assets worth of 1,000 crores and we haven't been able to do, probably we haven't been able to monetize it. So, shouldn't this be taken more, at a more faster pace so that there's no further dilution in equity?
We are working on that as well. If 5 years, 6 years back, our debt was around 5,500
So
crores.
if you see last 5 years, we have been consistently reducing the debt from 5,500. It is now 1,800 crores. So now balance non-core asset is 1,000 crores. We already sold in the past is around 1,500 crores. And 2,000 claim also 2,000 crores. So 3,500 crores we already sold and reduced the debt, and balance is 1,000 crores.
Okay.
And like dilution also, we have no further plans to raise more equity in near future.
Okay. And my second question is regarding the arbitration, which is related to slide 68. So out of this 4,000 crores, how much time does this take to, is there a faster process? Because we've also, gone through the Vivad se Vishwas scheme. So because there's a lot of capital which is blocked over here. So something we can do to speed up this, I'm sure you would be working on it. But some thoughts on these?
So like current year, we have received around 130 crores from Vivad se Vishwas. Next year also we expect to receive around 150 to 200 crores from Vivad se Vishwas. And rest is, at different stages, like something is in district court, something is in high court, something is in Supreme Court, so at various stages. So we expect to realize like on an average per annum 200 to 300 crores continuously.
Okay. Thank you, ma'am. All the best.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Herzel from Wealth Premier. Please go ahead.
Yeah, hello, good afternoon. Thank you for taking my question. My question was regarding the promoter pledge. So, is there any plan to reduce the pledge or cut the pledge this year?
The pledge has been given for borrowing taken by promoters on, when they infuse funds in the company. So as the progress of the company has been going up, now we will touch base with the lenders to reduce the pledge cover.
Yeah, because the pledge is in the range of some 80% odd now. What is the current pledge percentage now?
The pledge is for 80% of the shares. held by the promoters.
Yeah. Because if that could reduce, then that'd be a very good sign also that way. Thank you so much.
Right.
Thank you. The next question is from the line of Yashwanti from Cogent Finvest. Please go ahead.
Thank you and congratulations for the great set of numbers. It is really impressive to see your margins are improving. I just wanted to understand if this 15% margin will be maintained with the kind of order book and the segment in which we have present. It's not only for the FY25 but even going forward.
So what we expect is the margins would be maintained, 14% odd, operating EBITDA margins would be maintained.
Hello?
Yeah. We expect to maintain the margin at same level going.
Okay. Ma'am, considering the size of order around 80,000 plus crores and we are working capital intensive. So currently our debt stands at around 1,000 plus as you mentioned to my previous colleague. So what are the likely chances that this ratio will again go and then again debt should not be a burden on company's balance sheet?
So our working capital cycle has been reducing considerably over the years. Last year also it was around 250 odd days, which has come down to 180 days, the net working capital cycle this year. So that has been consistently improving, and because the collection cycle has improved drastically, the government is also focusing on clearing of all the payments faster. So we don't see a challenge, in elongated working capital cycle.
Okay. And sir, you also mentioned that you increased your stake in one of your projects. So what is the rationale behind it? You mentioned that it is a startup and you wanted to invest in, but what is coming as a bottom line to the company?
So it is just a startup. We have taken a 10% stake, so they will start doing business now. And because we see a lot of business coming in infrastructure segment where tunnel boring machines will be required, so this entity will specialize in servicing of the tunnel boring machines.
Okay. And this would be a strategy even like buying a stake in a couple of projects going even in the future?
No, nothing decided as of now.
Okay. Thank you so much. I'll join back in queue.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead. Mr. Viraj, your line has been unmuted. Please go ahead with your question.
Hello,
Yes, sir, we can hear you.
Hi, the net debt to EBITDA is 2.25 for FY26?
Yes, that is excluding the client advances.
Understood. Thank you.
Thank you. The next question is from the line of Pritesh Chedda from Lucky Investment. Please go ahead.
Sir, what is a part of this other income line, other income reporting that we have for FY24? And second, with the incrementally, how should we look at your interest expense? If you could just break up the interest expense into, financial cost-related expense and pure borrowing-related expense, and how do you see the trajectory?
So see, we have the interest expense this year was around 360 odd crores, out of which 70 crores is other borrowing costs, which will be BGLC costs and everything. Around 75 crores is interest on client advances, and rest is all borrowing debt.
Okay. So basically out of 360, 150 goes away. So 200 crores is your interest on borrowing, roughly.
Correct.
And on a borrowing number?
11.5.
At 11.5%.
Right.
Okay. And the non-fund limit is is what would be a part of the charges of 70 crores, right?
Right.
So how much the non-fund limit that you have?
We have around 4,000 crores of non-fund basis.
And my guess is it will be fully utilized.
No, we have unutilized limits as well, around 800 to 1,000 crores.
And what is the margin money on this 4,000 crore that you have to get the limit?
So there is no specific requirement. That depends upon bank to bank. There are various banks where we have low margins.
Okay. And incrementally, this particular line item, how do you see it moving with the expected revenue growth that you expect to have?
So we don't expect the interest to overall the finance cost to go up. We expect that this will be in similar lines, even with increased projects with increased working capital taken, because we will consistently be reducing debt. So overall serviceable debt plus client advances may remain in the similar range.
And what's the debt at the end of FY24?
Around 1,880 crores of debt, around 760 crores of land advances.
And the incremental orders that you are taking vis-a-vis the past orders which is there in your backlog, what is the difference in the working capital cycle there? Because if you are... Go ahead, sir.
So basically the amounts which are expected to be realized through arbitration awards and claims, that amount is consistently reducing because there are no incremental amounts getting added there. So my working capital cycle to that extent is reducing. My net normal working capital cycle is between 3 to 4 months, which is there for the new projects as well.
New projects is how much?
3 to 4 months.
3 to 4 months is your net working capital cycle on new projects.
Right.
And the pace of arbitration awards and claims that you've experienced so far is?
So that is moving fast because of various schemes introduced by government.
See, now, I will just interrupt. See, now the government has made a lot of changes. They appoint an independent engineer at the beginning of the project itself. So these are the variation extra item can be resolved during the tenure of the project itself. Further, there is Vivad Se Vishwas. As per NITI Aayog also, around 75% we can withdraw against submission of bank guarantee. And if independent engineer does not sort out, then conciliation committee also, various committee also. So government has also taken various initiatives where the claim settlement can take place during the tenure of the project itself.
Okay. So, how much arbitration award did you, or how much cash flow on account of arbitration award you received in FY24?
Around 130 crores.
130 crores.
Okay, so the pace is about 100, 152. So the major change is basically from the fact that the incremental business is at 3 to 4 months of working capital, which is bringing down your overall number of the reported working capital.
Right.
Okay. And what's the corresponding growth in revenue or growth in execution that you are expecting?
This year, around 10 to 15%, FY25. FY26 may be higher.
Okay. How much will be 26?
20 to 25%.
Okay. Okay. Thank you, sir. Thank you, ma'am.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Divya Bhagwat from Quantum Strategic Advisors. Please go ahead.
Hello. Am I audible?
Yes, ma'am.
Yes. So my question was, as we are considering the acquisition of Shell Tunneling and Infra Private Limited, can you please provide insights on how you foresee the acquisition impacting our company's overall growth strategy and also the market positioning in tunneling and infrastructure sector?
So this is only a strategic stake of 10%, which we have acquired, and we don't see any major cash outflow or anything happening for this acquisition. So no impact on the balance sheet. It is only an ancillary business where the servicing of tunnel boring machines, it will help our projects, as well as we will take up some works for other companies as
Okay. Okay. That's it. Thank you.
Thank you. The next question is from the line of Manoj, a retail investor. Please go ahead. Mr. Manoj, your line has been unmuted. Please go ahead with your question.
Yeah, I'm Manoj here, and I'm compliment all stakeholders for good set of numbers. I've got one question. Our CAGR for order book is around 13% till March month, and our expected growth in the order book is around 30%. Whereas our projected revenue growth for this year is between 10 to 15%. So I see the difference between the order book and execution percentage. So the situation will arise wherein our order book will keep on raising, whereas our revenue growth will not be in the same line. Thank you.
Sir, so this year, because of elections, the order inflow was lower, and that's why, because our orders are such, which is 4 to 5 years, so the first 6 to 9 months goes into site mobilization. So whatever orders we get this year, the maximum revenue impact will come in FY26. That's why we said the revenue growth in FY26 is estimated between 20 to 25%.
But we already have order book of 18,000 crores, which we must have received.
Correct. So that has a book-to-bill ratio of 4 to 4.5. So that's why we expect revenue to be growing by 10 to 15% this year. Because from 4,500 base, if we increase 10 to 15%, it crosses 5,000 crores.
I agree. But in given situation wherein we have lot of debt and in that situation, if we could increase our order execution rate, so probably it will be useful because our project execution cost will also reduce, our interest cost will also reduce, and our net profit will also improve. So is it possible to have targets slightly higher than 15% so that we match it with the order book rate?
Sir, we'll see what order inflow comes with segments, because again, hydropower is 4 to 5 years execution. If we get pump storage projects or other projects, then the execution cycle may be lower. So that will depend upon that mix.
So for hydropower projects, first 6 to 9 months goes for mobilization of the site, and it will start giving revenue, peak revenue at the third year. Second year, it will start picking up, giving up the revenue. So this is the cycle for hydro sector, and considering that, we are projecting the growth of 10 to 15% for the current year, FY25.
Okay, madam. But we have orders in our hand from last 3-4 years. This year we got 4,000 crores order. Before last year we must have got around 4,000 crores. Before that must have got around 4,000 crores. That's what my point was. So if you could increase
no, right, sir. But some of the projects got completed. Like last year, we handed over Sela Pass tunnel, and Prime Minister inaugurated the tunnel. We completed almost T15 tunnels. So some of the projects which were on the peak cycle got completed, and some of the projects which we got last year will get at the peak in FY26. So that's why we are saying FY26 at 20 to 25% growth will see.
Okay, ma'am. Thank you.
Thank you. The next question is from the line of Prashant Kshirsagar from Univide Corporate Research Private Limited. Please go ahead.
Good evening, and am I audible?
Yes,
hello.
Sir.
Hello.
Yes, sir.
Yes.
Yeah. I just want to ask you. You mentioned about the growth rate for FY26 at 20-25% of the revenue. Is there any assessment done for 26-27 by any chance by the management? What growth rate one should expect? Because your projects, subject to the political situation, which you are expecting more projects to be coming up for execution, the projects are in the range of 4 to 5 years. So, is there any assessment for 26-27 for the growth rate of revenue?
As per our current estimate, it will be around 20%.
20%.
Yes.
Year-on-year, yes?
Year-on-year, 20%.
Year-on-year. Okay.
Yes.
And second question is, you have been awarded the contract for the Dibang hydroelectric project. Just wanted to ask you, when should you start the work? When do you expect to start the work on the ground for the project?
So it is in the mobilization phase. The revenue will start coming in this year.
This year. From FY25, some revenue will start coming in. And FY26, it will start giving more revenue.
So which month of 25 you expect some revenue to come?
So it depends. See, right now we are in mobilization phase. So post-monsoon, mostly the revenues will
Q3 onwards, you can see.
Q3 onwards. Okay. Thanks. And the last question is, in an irrigation contract which you received, a project which you received for execution, what should be the average time length for the project, so that just for understanding purpose?
Irrigation is around 3 to 4 years.
3 to 4 years for any project, or slightly simpler projects or complex?
It depends on the project to project. Some of the project 2.5, 3 years also.
2.5, 3 years. So, and on an average, 3 years we should take for the modeling?
Irrigation on an average 3 years we should.
Okay. Thanks a lot and all the best, sir.
Thank you.
For the coming years.
Thank you. The next follow-up question is from the line of Chira from White Pine Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just wanted to pick your thought process. We have a land bank of 1,000-odd crores that you have put across, and how should one look at monetization of that? The reason I'm asking is, you are willing to dilute the equity of the company, but not looking to monetize the land bank, even if you have to compromise on some part of resale value. So you are expecting a sharp jump in the resale value because of development happening in that area, or how should one? And why I'm asking this question is, while you have raised capital which will take care of near term, given the way the order flow is expected in hydro, and I'm putting PSP as a part of hydro as well as irrigation, you may again need capital. So how are you thinking about this monetization of assets? If you can just help us understand, it would be great.
So post the elections, we will, we expect a lot of traction to come in real estate sales as well. So we will look at selling a lot of land parcels in next 2 years or so, if we get the right values.
Because we are hoping to monetize this in a reasonable time, and that is the question that you should relook at your internal matrices. At least you start monitoring some part of the assets, so it gives you the cash when you need for the next leg of growth. That's a humble suggestion. The second point is, I just logged in a bit late. Sorry for repetition. Is there any one-off in the sharp margin expansion that we have seen, which is at 17% in the quarter?
So there was a 50 crore Vivad Se Vishwas arbitration
Okay.
income.
So that is accounted over. Yeah, okay. Great. And one last question, if I can. So this 10% stake in this tunnel boring company, because your capital investment is not significant, why didn't you think of taking a bigger stake in the company? You are not putting any major capital, right, in that company. And if it is a good ancillary part, you could have gone for at least 25-30% stake in the company, which is a significant strategic stake.
Right now we have taken a 10% strategic stake. So it depends upon how startup will, perform. We'll see in the future.
Okay. Yeah. Thank you. Thank you very much.
Thank you. The next question is from the line of Jay Shah from Arihant Capital. Please go ahead.
Very like the performance of the company's financials and all. So my question is like, I have seen that you have received a total of 9 projects in the last quarter, Could you provide a total order book value for this project?
Sorry, come again? I didn't get your question.
So basically, I have seen that you have received a total of 9 projects in the last quarter. So can you provide a
last financial year, that is around 4,000 crores.
Okay, 4,000 crore. So what is the company's projected top line and bottom line growth for the upcoming quarters then?
So on a full year basis, we expect 10 to 15% growth in the top line. And bottom line, around same percentage we should be able to maintain.
Okay, sir. Thank you.
Thank you. The next question is from the line of Yashwanti from Cogent Finvest. Please go ahead.
Thanks once again for the opportunity. So my question is last year from FY19 to FY23, we have been continuously on the upswing on the order book side. This year we have seen a little slowdown or little downturn in the order book. Is it because of the election year or anything in a delay in the project award?
No, mainly because of the election year, the orders have kind of shifted and may expected to receive this year.
So can we assume that once this election is out, maybe by the next 2 to 3 months, 4 months, we can see a good surge in the order book?
We
or
also
the award and order book?
Yeah, we also expect the same lot of orders to come in post-election.
Okay. Sir, what is your outlook or what is your view on this government project on Har Ghar Jal, then irrigation projects and hydropower focus? So what kind of a surge you can see for the next 2 to 3 years?
So we expect a lot of works to come in. There are lakhs of crores of works. It's like how much projects we will identify to take on our own.
Okay. Sir, have you noticed or have you seen any competitors focusing on a hydropower, giving us very stiff competition to you in the last 6 months or 8 months, considering the award from the projects coming from the government, the lucrative sector of the hydropower segment as a part of the infrastructure?
We don't see any new companies coming in. There are existing companies who are executing.
Okay. And sir, currently what would be our share in the hydro project infrastructure segment?
So traditionally it has been around 25%. Current execution projects we are doing around 45% of the existing projects.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, we'll take this as the last question, and I'll hand the conference over to Ms. Vaishnavi Ambokar from Kirin Advisors for closing comments.
Hello?
Yes,
Hello?
ma'am. Yes, ma'am.
Yeah. Thank you, ma'am. And thank you everyone for joining the conference call of Patel Engineering Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
Thank you.
Thank you.
Thank you.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.